In Investing 101 today, this could be good for investors. Some brokers are lowering their fees. Joining us now is Greg McBride at Bankrate.com.
There's a real price war taking place among many of the top mutual fund companies and brokerage firms. Companies like Vanguard, Fidelity, Charles Schwab have been pushing down fees, and not just on mutual funds. They've been eliminating commissions on many exchange-traded funds and pushing down the expense ratios that investors have to pay for both mutual funds and exchange-traded funds. This is a clear win for investors. The less you pay out in investment expenses, the more of that return you get to keep.
Why do you think this is happening?
There's a lot of competition among brokerage firms to earn the business of consumers and get them to invest with them with the idea of playing the long game. Help consumers invest and build wealth, and over time they'll have more and more assets with you. And they're doing this by attracting investors in the door, kind of like supermarkets do with loss leaders. They're offering mutual funds and exchange-traded funds that you can purchase without commission, and they're in a real war to reduce the expense ratios that investors pay.
What are you seeing in the race between Vanguard, Fidelity, and others?
Companies like Fidelity, Vanguard, Charles Schwab are engaged in a bit of a war with each other in an effort to attract consumer business. Specifically what they've been doing, pushing down expense ratios on exchange-traded funds and mutual funds, adding more exchange-traded funds to their platforms that can be bought and sold commission-free. So the bottom line for investors is you may be able to avoid commissions altogether on most, if not all, of your trades on mutual funds and exchange-traded funds, and the expense ratios are going down to rock bottom levels, literally just a couple of bucks per $10,000 you invest.
Greg, is there any rule of thumb about how much in fees investors should be paying or expect to pay?
When looking at mutual funds, you want to keep your expense ratios below 1%. You might be paying a little bit more than that for certain international funds, but if you look more broadly and look at index funds, you can drive those expense ratios down to rock bottom levels, or in some cases even zero. And the importance of this is the less you pay out in expenses, the more of that investment return you get to keep.
Thank you, Greg. One other investing mention. Everybody's talking about that historic Apple $1 trillion market cap. Well, check this out. CNBC did the math and calculates people who invested $1,000 in Apple 10 years ago would now have $9 million. How do you like those apples? Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.